Alright, Chapter 3, Section 2. Tests are given in the working paper. Your instructor, that's me, will guide you through the following examples. Kelly Bergen owes Bergam Services using the following account. Some of the accounts will be explained tomorrow. Alright, cash, accounts receivable, all that stuff. So, yesterday we talked about how cash has a normal, if we go here, remember A equals L plus OE. What's on the left side? The left side is debit. The right side is credit. Okay, because all the assets have debit balances, all the liabilities, owner's equity have credit balances. So, on April 1st, received cash from the owner as an investment. What are the two accounts being affected? Cash and owner's equity. All right. Which one is being debited? Cash. Why? Because it's increasing, right? And cash, being an asset, cash is an asset, so it's getting decreased, or getting debited. Okay, we're receiving cash, so cash is getting debited for 5,000 American dollars. What is the other account? Owner's equity. Okay, and that's in here. In here it says Kathy, it's the capital account. There's a list of the accounts on the top of there, and they work together. Kathy Bergam Capital. And what are we, that is going up as well, right? Because it's a plus deal, right? So what are we doing to owner's equity? How do we do that? Do we debit it or credit it? We credit it. So we're going to credit it for 5,000 American dollars. Easy enough? All right. You get that, Sid? Mm-hmm. Fire. Number 2, paid cash for supplies. Okay. What are the two accounts? Cash and supplies. Both are assets. So which one are we going to debit? Which one's increasing? Supplies. So we're going to debit supplies for $50. And Sydney, what are we going to do to cash? Cash. What are we going to do to cash? We're on number 2.
I don't want to say something.
Let's say there's only 4 of us in here. Lexi would know what you're talking about anyway. Yeah, you would subtract it. Okay? And cash, being an asset, what would you do to it to make it go down? Cash is an asset, has a normal debit balance. So what would you do to cash to make it go down? Debit or credit? It's multiple choice.
Credit.
Very good. See? Cash, credit for $50. Does that make sense? There's kind of a pattern here. Whenever you debit something, you have to credit something else. Paid cash for insurance. Insurance and cash. What are we going to debit? Prepaid insurance for $75. And what's getting debited? Cash for $75. Yeah. 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 You'll have all these T accounts on it too. On the 6th, bought supplies on account. Supplies is increasing. Supplies, being the asset, is going to get debited. So supplies increased for $100. We know that. If you can figure one out by process of elimination, you can figure the other one out. Because if you credit something, you have to debit the other thing. accounts payable to Bales Supplies. Accounts payable, Bales Supply will be credited for $100 because that's a liability, right? Right. All right. Now on the 9th, we're paying cash to Bales Supplies, $50. We're paying half of it. We owe them $100, so we're paying half of it. So what are we going to debit? What's that? Accounts payable. Bales Supply. And we're going to debit that. Does that mean it's increasing or decreasing? It's decreasing, right? And then what did we pay with? Cash, $50. So is our cash increasing or decreasing? There you go.